men used to go to war, now they are prostituting themselves on crypto Twitter.
Yeah.
And buying plush penguins.
Yeah, and going to keine Musik concerts in Berlin.
I would probably die in war, but I would definitely go to war, I guess, like that. What's far more important, and that isn't spoken about enough, is people were locked up. Like, people were bored and they were online 24/7. So all they did was Netflix, YouTube, and gamble. That was the number one catalyst last cycle. Not that people had more money.
Have you guys been using prediction markets at all?
You basically call like your most retarded friend and tell him, look, I give you like $250 for you to throw dildo onto the field at a WNBA game, and I buy you the tickets. I mean, they're not as expensive as normal NBA tickets, and you bet on it on Polymarket.
Melania, I would say, was the 9/11 of the cycle so far. So in that sense,
A second meme coin has hit the charts, Mr. President.
exactly, we are in the last phases of this cycle. I think everyone knows that, whether it's like 1 month left or 3 months left or 5 months left, who knows.
Welcome back, everybody. What's the state of the markets? What is sentiment doing?
Pretty sideways mode, I would say.
Yeah, I mean, we had like a huge blast last week, so I think it's just a normal thing that it slows down. Potentially, it's even a good thing that it doesn't escalate any further that quickly, at least.
Bullish dip, healthy nuke.
It's quite interesting that, I mean, ETH just broke the 2021 all-time highs by a couple of dozen dollars. It unfortunately didn't remain up there for so long, but in theory, this should really set the spirits on fire and everybody should be bulled up to the tits. But while markets have been moving fast in terms of market cap changes of the overall market cap of crypto, everything feels really slow. If you look at news announcements, new releases, I think in terms of releases, there's a bunch of interesting projects, especially on the DeFi side. I mean, at least that's what I'm monitoring most closely. But all these treasury things, some minor nation states considering BTC strategic reserves, it all feels very exhausting. Nobody really cares anymore. There's now a trend of treasuries starting to pick up these centralized exchange tokens, which are somewhat of a treasury themselves already. So you just see a lot of like mutual buying, all these weird partnerships where projects buy 5%, 10% of each other's tokens. There's a bidding war in potentially acquiring Stargate between Layer 0 or vice versa and Wormhole. But yeah, overall, even though we've just reached ETH all-time highs and that in theory should be the kickoff for alt season, it feels very slow.
Yeah, I have a couple thoughts on that. My main number one thought is when things get more and more adoption and interest, they generally dilute. So while as a subculture or niche, all the euphoria and hype is very focused around that subculture and niche, the moment more people adopt it, it's going to be also people that don't care about it that much. They maybe just like want to have some exposure, for example. They don't talk about it all day. And that kind of dilutes the excitement, but also with more and more projects, obviously like people are going to invest in and participate in different and more projects. So I feel like dilution is a big factor why excitement is scattered and things are not really focused on the 3 only tokens that exist anymore. The second thing is, when you think about it, Max, I mentioned this to you a lot of times, euphoria is kind of like harvesting the yield and of the hard work of the past, right? Like the moment the sentiment switches, it's too late. Then that usually happens when everything goes up or when everything pumps. And there's no entry anymore. It's just like you ride the wave and you try to like make a profit or whatever your goal is to do. And I think right now, I mean, we are in the last innings. We are in the last phases of this cycle. I think everyone knows that, whether it's like 1 month left or 3 months left or 5 months left, who knows? I don't think 5 months, by the way. I think between 1 and 3 or 4. And I think now is kind of the time to make the final bets, right? And that's probably not meme coins anymore, because there's always a risk of sentiment turning with the black swan. And if your meme coins are all going to nuke 95%, but if you're in blue chips, yes, you might eat like a 30, 40% dip, but your portfolio doesn't go to zero. So that's my current read. I think generally like things are very diluted. I see like a lot of mini trends, but nothing really converges into one big new thing.
How about you, Yuri?
I feel relatively similar. Think next couple of weeks, months potentially are going to be exciting, but on a very high meta level. So I think we will see like some of the obvious bets. I think Solana is going to do well, Ethereum. So the high level bets, but I'm not going to do new bets. I'm just, watching a little bit from the far, but I also agree that we are like really in the final moves of this bull market. I think one thing that I would love to discuss though is, now that we talk about cycles again, actually this cycle felt like so weird. Like, I don't know, like how your thoughts are about that, but it's not comparable at all to 2017, not to 2021. There were like, yes, there were like some chains that did very well, but the majority, except Bitcoin, of course, had a super hard time in this cycle justifying its existence. And I think this wasn't the case in 2021. In 2021, every chain, every DeFi ecosystem had a justification. And this bull cycle was also, I think, a little bit more mature, where you really had, because the competition was pretty strong, that you really needed to have a strong case for your existence. Like, why are you around at all? Why do you need a token? This wasn't the case last cycle.
On the topic of cycles, I mean, this is just my second cycle. I only became part of the industry in early 2021, so I can only talk about like secondary sources that I've read, seen, heard about 2017, but 2018. But we need to keep in mind that these cycles are not set in stone. Like, I don't think we are going to do well in the future if we are just trying to play financial astrology here. Like, there's no causal need for these cycles to repeat the exact way they've been unfolding before. And frankly, the circumstances, the macro circumstances and the industry circumstances have been vastly different every time. I mean, of course, there is a coincidence of like shifting global liquidity flows, etc. And I mean, you can attribute that to coincidence. You can attribute that to cyclicality and like the financial astrology. And I do have a lot of sympathy with these theories, because while there is no physical necessity for this to repeat, if you use that as a heuristic and if you at least implement that in your analysis, you can do much better than compared to completely ignoring it. So we have to keep in mind that BTC has definitely become an institutional asset, and ETH by now as well. With Tom Lee, Ethereum has found its Michael Saylor, and institutional flows completely dominate this cycle. It is not retail dominated. We have not seen the helicopter money given out, particularly to US market participants. We do not have such a strong correlation with retail hype around other fintech platforms like Robinhood and all the zero day to expiry option trading that we've seen in 2020 and 2021. So these are all factors that are lacking behind. And overall, over the last 4 years after COVID, and I mean, in our introductory episodes, we have discussed how 2020 and the macro trends have been such a pivotal point, not only in economics, but in society at large. I think society has become much more polarized. People are now worrying about different things than what crypto assets to speculate on.
Yeah.
So it's much harder, even though we have matured a lot as an industry in these 4 years. Like, the UX has improved significantly, liquidity has improved, financial mechanisms have improved. Of course, there are still a lot of like shenanigans going on. That's just the nature of an early industry. But a lot of the problems we've been talking about 4 years ago have improved a lot. And still, it is much more difficult to attract retail and to get them interested in these retail.
I have a lot of thoughts on this, and I wanna kind of like start with an analogy. Similarly, how tariffs are the end of the day hitting the consumer, I think one misconception about QE during COVID is people act as if money landed in people's pockets, which if you were a small business owner, maybe a little bit, but you certainly didn't gamble that on crypto. I think most people didn't really see much. I think what's far more important, and that isn't spoken about enough, is people were locked up. Like people were bored, they were locked up at home, and they were online 24/7. So all they did was Netflix, YouTube, and gamble or play games. I think that was the number one catalyst last cycle. Not that people had more money. I mean, yes, QE happened.
They did have more money, but I mean, if you look at how these stimulus checks worked, that was one of the very few instances of QE that actually landed at the hands of people right away. That was not indirect QE through stimulus, through like lower interest rates, and it all trickling down businesses.
I just think that the money people got as a replacement for their salary or whatever, I don't think people gambled that necessarily. I think it was more like gamble out of boredom. That's my main thesis. So even if rate cuts or monetary policy changes happen, I don't think it would have the same effect because you don't have this lockup effect. And the second thing I just want to mention real quick is like, how many times can someone get burned, right? Like retail is, at the end of the day, the peer group that is getting burned when they enter this late in the cycle. It can happen once, twice, but I think for most people in that generation, they don't do it again. And I think we're kind of in this part where, yeah, like people that got burned in the previous 1-2 cycles, like why would they come gamble on new assets now? Something crazy, like whenever something like Fartcoin happens, I think people come back. It's like, oh, from okay market cap to $1 billion in 2 months. That's crazy. It could change my life. But other than that, I don't think, like, it's going to be more and more difficult for that to happen. And there's going to be more and more resistance and barriers for these people to come. And especially if they're not bored, I just don't see them coming into the cycle as much as the last 1-2 cycles. So that's my latest kind of like analysis on this topic of retail.
Yeah, I think we really shouldn't underestimate how brutal 2022 was. So I was actually very, very lucky, to be very honest, because I wasn't exposed to Terra, I wasn't exposed to FTX, but there were like so many people using FTX and they're still traumatized. So just imagine you're doing great. I mean, for most people, like your life changes upside down if you reach the 100K benchmark. And there were like a lot of people entering crypto. They thought they made it and it felt so real. And all of a sudden, FTX came and said, well, surprise, surprise, you didn't make it. And I think, yeah, we really shouldn't underestimate these things. And if you were very unlucky, you got basically affected by all of those things. There was also the 3AC thing. Again, Terra, just imagine that you think you have like 100K in cash sitting around and accumulating magic 15% yield. And all of a sudden you wake up in the morning and it's gone.
Yeah.
Yeah, so there are a lot of people just tired.
I've been hit by both of these, both Terra Luna.
Yeah, I remember. Yeah.
But I mean, I think my situation was different in the way that, first of all, I didn't have a lot of capital. I was still a student back then. So it was the first time I ever lost a lot percentage-wise, because it was pretty much all my savings I had saved up until I was 18 and moved out of my parents' apartment. And now suddenly most of that was gone after like the top of 2021 and the bottom of 2022. I think I lost between 80 to 85% of everything I owned, because both Terra Luna and FTX were like 20 to 30% immediate haircuts of just everything. So it wasn't even just price depreciation. It was the implosion of these two projects that hit the most by far. But my situation was special in a way I didn't really have anywhere else to go. Like, yeah, I could have focused on a traditional finance career path, but if I have the opportunity to kind of, make a living by yapping with people about the state of the trenches and like hanging on crypto Twitter, trying to extract some DeFi yield farming opportunities there, versus being a PowerPoint monkey for 70 hours a week and having to pretend that this job that I was doing is meaningful, which is not. And if I look at the mental state of all of my traditional finance friends, I kind of don't mind the path that I've chosen. But I think it's very reasonable, especially if you just used crypto as an investment vehicle and not necessarily for career purposes. And if you already had an established career path, maybe owned a house, also exposed to equities, I think it's very reasonable to not want to enter this industry again after what happened with Luna and FTX.
I wasn't exposed to FTX. I wasn't exposed to the asset Luna directly, but for some reason I thought the best stable coin to pick is UST, and that kind of broke my neck. But you know, the thing is, I know not everyone is the same, and it is real money for most people. But in the end of the day, having seen this in crypto over and over again, it's almost as if, I mean, it's going to be a stupid example, but like you're playing Diablo in hardcore mode, you just died, you have to start again from level 1, right? So it's like, okay, cool, happens. Like, let's try again. That's my mindset. I know for most people, they went away and they didn't come back. But yeah, it was brutal. And especially for people whose UST was locked up in actual like yield contracts, it was just eternal pain. In hindsight, I can laugh about it because, you know, happens. But yeah, it was brutal. And again, I'm with both of you. Like, I think those people, something crazy needs to happen for those people to come back. For example, something like Trump launching a coin is one of these events where people could come back. But if it's like 3-4 days, people making money, mainly snipers, hardcore insiders, and then it's down only, it has the exact opposite effect. Melania, I would say, was the 9/11 of the cycle so far. So in that sense,
a second meme coin has hit the charts, Mr. President.
Exactly. I really, like, again, people aren't bored and on their computer. They're not like craving to gamble. I mean, the one thing I'm going to say though is it's impossible to make it with a traditional salary or like wage work. So I think that is definitely in favor of people trying to get lucky or like trying to have an edge with crypto. But even there, basically what Bucky said last time, you know, even there, like most people are going to lose, and especially if you don't have an edge. So combined with the fact that we have orders of magnitude more assets than we ever had in any cycle, there's always going to be outliers which don't invalidate the rule. And the rule is that I think most assets will just not pump and slow bleed out over the next years. And I think the ones that won't will change lives. But, you know, who knows which one those will be. Murad would say SPX is the one. So I don't know.
Are these observations affecting your guys' positioning and cycle outlook a bit compared to what you would have done in the last cycle?
Yes, definitely.
sure.
One thing that's for me like so certain right now is, so I have to out myself as a former Cosmos person. So yeah, I learned a lot from this. So I was like too much focused on the tech. I didn't look into, you know, how community worked that much, or how people basically decided to build cults around things, how growth and adoption really works. Because in the previous cycle, everything with cool tech worked. But then now in the new years of 2024, 2025, it stopped to work because people said, yeah, so what? I don't really give a shit about this thing. What does it actually do? What's cool about this? What's funny about this? And then usually these projects that invented some cross-chain stuff that just barely someone used raised like for 250 million or something crazy. So yeah, was my biggest lesson that I've learned. I was like too much exposed to one ecosystem, was too much married to one tech. And for me, I really like saw once again the value of Bitcoin. So it was like not only because price went up, but also because we have like so much more uncertainty in the world accumulated. So all of the events that accumulated over the past 2 to 3 years, I just feel super comfortable having an asset basically on my ledger that I can remind in my head and walk around. And I know that there are so many places in the world where it gets accepted right now. I can get cash in Istanbul for BTC. I can get cash in Buenos Aires for Bitcoin. So this is like what once again really reminded me how powerful this asset is, and that everything else with regards to 20 new blockchains with 20 different consensus mechanisms and bridging mechanisms is super irrelevant for most people, and including me.
Did you take Istanbul as an example, referring to my hairline or referring to my background?
Of course. Also Max, because it's like basically you're next to each other, so it's like before and after surgery.
Perfect. Interesting. So it affected me as well, but for completely different reasons. I think the tech obfuscation layer I've been bearish about for a very long time, because I'm much more comfortable admitting we have no freaking idea how to value these things. So they have no intrinsic value. Let's just like vibe value them, as opposed to, oh, there's this technology and there's that cash flow. The moment we start doing that, the value drops an order of magnitude, because cash flows are non-existent. It's like every bakery in the corner has more cash flow than those chains. And I don't know, like any other methodology to value these things, I think will fail as much. So I think agreeing on these things not having any intrinsic value, we have no idea how to value them, it's just like magic internet money, I think is still the best way to value this. However, when it comes to me, it's just like 2017. You could buy any ICO in the world and it would 10x. And you did that 10 times, and you didn't find the perfect exit on each. Maybe you only sold for 3 or 4x, you didn't catch the 10x exit, but you were still in profits. Obviously isn't the case anymore. I think for me, it just means that gambling on new token launches does not make any sense. Like, look at like most Binance or Bybit listings. I would say 95% of those tokens that were listed have been down afterwards, and that is when retail exposure starts. So, conclusion, don't do any gambles on new token launches. If at all, try to like projects or narratives that you like. And you know, look, TA and technical analysis I think is mostly bullshit, but rather than top blasting a chart, what I am looking for is technically, if it pumps, it pumps. You obviously don't enter unless you have been waiting for that breakout in a zone. But if you haven't been particularly like waiting for that breakout, what I'm doing is like I wait for the retrace, for the pullback, and then I wait for this like traditional accumulation pattern, right? This like up, down, sideways, higher highs, lower lows, higher lows, higher highs. If I see that pattern, I build a position. If I like the narrative, if I like the timing, if I like the project, I don't top blast into charts anymore. I don't at all buy new gambles or new launches. I think that's way more dangerous to lose. But then again, if another fart coin comes up this cycle, I think you don't have weeks. I think you have like few days to buy that. So there's always going to be exceptions, but generally my conclusion is buy less token and be much more careful when you buy them. Again, ICOs, you would just buy and sell. You couldn't lose money. Now I think you have to be much more careful where you enter, where you exit. It's normal, like more players joining the game, the skill level rises. It's going to be more and more difficult. You know, in that sense, I read a lot of posts that let Gake and flipping profits and Cupsy ruined the trenches and ruined the cycle and extracted only. What is your guys' take on that?
You go first, Max.
I find it hard. I mean, I'm not that deep in the trenches, but I interact a lot with these individual personalities. I think it is somewhat similar to if you had said in like the perps and trading part of crypto Twitter that like Hazaka or XHedge or Kobe or whoever had ruined trading for everybody else. I do not think that any one of these individuals is able to destroy an entire sector. Of course, there are some that are standing out, like Hayden Davis and the whole cabal surrounding that, because that's just a completely asymmetric position. It's not like, okay, you're one big fish in an ocean of perps trader. It's like you are the one pulling the strings, you're the one launching it, you're the one sniping it. So of course the power dynamics in in the meme coin sector are a little bit different. What I find interesting and what I would be curious to get your opinion on is that if you look at the meme coins of last year, especially some of these dog derivatives, some of the cat derivatives like Popcat, Mog, all of these things, Giga, SPX. Also, I mean, Fortcoin is a little bit different because it emerged a little later. But of these Murat coins, all the like last meme coin cycle coins, they have not all completely died. I mean, it's not like they're all down 95% from their all-time highs, but they have, I would say, underperformed severely ever since January and December. Would you say that these are still alive from a community perspective, or would you say that it's kind of over for them?
So they're far from dead. And especially if you look at the prices Murat called the tokens at, I think they're still all up 10x from that. So if you aped when Murat called them, you're on average up next. So they're far from being dead. I think if Murat were to do the list again, he would definitely change it completely. I think the one downside of that risk is it doesn't account for flexibility. It didn't catch a Moodang, it didn't catch a Peanut, it didn't catch a Fartcoin exactly for that reason. It's like you cannot add tokens to the list. It just dilutes the whole point of being like a long-term holder, visionary for a movement coin. He himself, I think, tweeted something along the lines of everything will converge into a single token. So I think he's been an SPX maxi for the longest time. Like, he doesn't even shill Giga anymore. I think Giga will do fine. I think Giga will still like 2-3x from here. I don't know if it will reach all-time high, which was close to $1 billion. SPX, I think, really is the coin of the cycle, to be very honest with everyone. Like, I do genuinely believe that. But I don't think other coins will die. Ironically, I do think that there will be a new runner, a new coin that will temporarily even overtake SPX. Because it's just crazy how fast things move and the craziness and the euphoria of the space. So to answer your question, no, they're not dead. Most people should still be up unless they're top blasted. And that's exactly the point. Like, you can't just blindly ape into tokens anymore. You have to be very, very careful with entries. And ideally, like on the highs, take initials, take principal out. Otherwise, you're going to get wrecked.
Are there any of the newish meme coins that you think still have legs to run? The ones that have had a little of a season this year, like I think it was House Coin and Chill House, Unstable Coin, and the Useless, and like some others. So people in the community are talking about, like, do these have legs, or are they just kind of cursed to never break the 100 million, 200 million, 300 million market cap barrier?
I think they have legs. I think you really have to go launchpad by launchpad because every launchpad is in desperate need of their runner. I think, Jupiter has Uranus, Bonk has Useless. Of course, like a few other smaller ones that run. And then the rest is, sure, there's been a few newer ones like Bags and Heaven. I don't think they will be relevant in a few weeks, months from now. Such as like exactly like Believe app isn't really that relevant anymore. So I think it comes down to the pump ones. And regarding pump, you mentioned Housecoin, you mentioned Unstable Coin, you didn't mention, but like there's like Tokaboo, which is the gamble coin. There's Troll. Troll had a huge run. Troll is still above 200, I think.
I've heard of that too.
So, I do think that those will exist and those will run, and I think a new pump fund token, though, will be a crazy runner. Like, when I talk about the new runner I'm expecting this cycle, it has to happen on pump fund. There's also DAO's fund, which recently had a runner, which is LLM, Latina language model. Like, there's all these there's all these like tokens for the different launch pads. Are they super sustainable? Obviously not. But I think, especially on pump, I do see like 2-3 tokens that will still be relevant even next cycle. And I think Troll is one of them. And I think like Unstable, Housecoin are candidates, although I don't really know. Like Housecoin lost a lot of steam, and Unstable Coin yet to see. Tokaboo could be also. There's a few more. There's like Neat, which is this like not in education and training, which I think Elon likes a lot, and also Gainsy shills from time to time. Stuff like Chill House, I think, will completely fade away after the cycle. It's just like the meme of the cycle, and people will not remember it. But yeah, I do think some of them have legs.
The thing that I find hard to imagine is just who's the marginal buyer for these things, because that's right now crypto and every macro relevant asset class, it's just a flows game. It's not a fundamentals game because the denominator is being devalued to zero. And if you look at many of these traditional financial metrics, they are not fake, but they are artificially propped up. And this whole meme of the economy is not real, I think while it is not true in a literal sense, it is true in an abstract sense. If you just look at the type of products, like the whole Labubu economy, like this is not a real product, but yet these things are very relevant to contributing a lot of revenue and money to these companies. So crypto is completely institutionally driven. There is a slight expectations that some fintechs or institution may be interested in bidding DeFi coins too. That's been at least the DeFi coin investor. That's the thesis. But like, who's the marginal bidder for meme coins?
I wanna do like a little thought experiment, and the numbers I'm about to mention are probably not accurate, but the ballparks are correct. If you were to start a pump fund token today and bond it, you need what, like 20K, 25K, something like that. Then it sits at like 70,000 market cap or something like that. You probably have like 70 or 80% of the supply or some crazy number. If you put in another 10K, the token sits at 250K market cap. By then you have almost 90% of the supply. I know this is not a realistic case, but just stick with me for the sake of the thought experiment. Fast forward, if you inject K and only buy pressure in one of these meme coins, you probably will have 95% of the supply, and the token will be at a market cap of probably $1 million, roughly 10x, right? So if you continue that math, for a token to, just from a pure market cap perspective, obviously this is all paper value as there's no real value in my example. For a token to go to 100 million market cap, you need less than $1 million for sure. It's nothing. It's very doable. Like it's not crazy. So all you have to do, if you crime it, is you have to lock up enough supply in good hands and only have like 10% of the supply tradable, so to speak. That's the crime way of doing it, right? And that's what's happening with most coins, by the way. That's why I give this specific example.
But if you have such a low percentage in the liquidity pool, so like if you keep liquidity...
liquidity is even less. If 10% is tradable, that means liquidity pool has 5% max.
Then I mean, it's not... I mean, of course, many small meme coin investors completely ignore depth of liquidity, etc. But the ones who would be needed to push it, let's say, from a 10 million market cap to 100 million market cap, they will definitely look at that.
Because no.
How do I get out of this? And if there's no liquidity, they will be stuck with
That's a separate question. So I just wanted to kind of like close this example and then transition back to your question, which is who's buying this? Like, where's the buying pressure coming for this like random meme coins? So what I wanted to say is, if you want to crime a meme coin to 100 million, which may look impressive to CT, it's not impressive at all. Like, and the craziest part is the million you put into the chart, you probably can relatively risk-free take out. Of course, you would nuke the chart, but like if you go full crime mode, you can put in 1 million and at least take out 1 million. Probably you can take out more, 1.5 million, 2 million, or whatever. And that happens all the time. So that's why like I'm not impressed at all by high market caps. I think these are like irrelevant. I think like I'm more, and I think launch pads are doing that. They pump up their runner to like high fake market caps, and then those obviously are not sustainable. So to answer your question, it's two ways. One, you don't need that much capital to reach these market caps, especially if you methodically do it smart as a token launcher. But secondly, even if you have real trading volume and 50% of my example is sell pressure, it's still nothing. Okay, then you need 2 million. Like, you know what I mean? assume 50% is buy and 50% is sell. It's laughable how much money you need to inject into these projects. And even Fartcoin sitting at 700-800 million market cap, in its liquidity pool, it has like what, 20 million? Right? So it's less than 10%. It's 5% or less. It's 3% or something like that.
Yeah, but it's large enough to attract large players to the game
because of the volume of the arbitrage. There's more like market makers who own the token. I mean, if you think of like taking away 1 million from the liquidity pool, 900,000 will be filled up immediately by bots and arbitrageurs and market makers who take the other side. So theoretically, the number you see in the pool is not how much you can get out. You can get out way more if you want.
Yeah, I can agree with you that it's very easy to pump these tokens up to a market cap, but assuming there's only 10% liquid trading, or take whatever arbitrary percentage, you will be the main liquidity provider if you lock up that much supply on your own wallets, because nobody else is gonna LP that thing.
No, I'm talking about the normal launchpad mechanism of Bonk and Pump Fund. When after the bonding, they migrate to a DEX, there's like roughly 10-12% left, maybe 20% max. If you buy that out to bring it to like 500k market cap, by that time, there's 10% in the liquidity pool. If it goes to 1 million or 2, there's 5% in the liquidity pool. And then like if it goes to a couple 100 million, there's 2-3% in the liquidity pool. That's roughly the dynamic. Assuming no additional liquidity positions are opened by the buyers.
I mean, the point I wanted to disagree on is that if you put 1 million into the chart, that you will at least get 1 million out, because you dismissed that it is very reflexive. Like if you put 1 million into the chart, that will trigger some other people to also buy. But if you, as the largest holder, try to exit with size and nuke the chart, it's also reflexive on the downside. And since you are the majority of the LP, and there is literally no counterparty.
You are not the majority of the LP. The LP is locked by the launchpad, mostly. You're selling into the locked LP.
Okay, but it's I mean, the LP will literally devalue to nothing on the
Yeah, that's crime. That's the rugs.
Yeah, but you're not if you put 1 million in, you're not going to be able to take 1 million out. That's just not working that way.
That's exactly how it works. I mean, how do you think Alt from CryptoBeast or Libra or did it?
Because they were able to sell at the top where there was enough counterparties in the market who also wanted to buy this thing. If you hold 90,
I'm not. I mean, of course.
Nobody will be your counterparty. You will be your own counterparty. You'll nuke the thing to zero by taking out like 50k.
No. I don't think you understand how it works. So the only way you will lose money when you inject 1 million is when you skew that 1 million to the later end of the chart, to the higher price of the chart. You don't buy like the first 70%, but maybe you buy like the last 3%. Then you will lose money for sure. But assuming you inject that 1 million relatively early, think of this example. If you are the only trader in the world, you launch your own token, you one-click 1 million, basically what happens is you lose 1% fee or 1.5% fee of the DEX. So you get a little less. But the second there is another buyer after you, which happens exactly after a chart goes up, people FOMO in, it's impossible to get less out. It's impossible.
Yeah, but you assume that if you buy, others will buy, but you neglect that if you sell, others will sell.
No. So you can think of it this way. There are sophisticated programs. So obviously you cannot inject that 1 million up front, because if you just front run 1 million, no one's going to buy. It's going to look like a pure bundle scam thing. But let's say you make a realistic plan. We're talking about crime, by the way, right now, right? It's like that. But I've seen this so many times on chain. So I just want to explain how this works. There's like 300 addresses that look organic. Random bots literally buy and sell this token. It's all funded from a random exchange. To mix it up, you use like 5 different exchanges. To mix it up, you use different funding dates for these wallets. Some of these wallets are 2 years old. Those wallets are being sold, by the way. Like you can buy used wallets, the keys of used wallets and stuff like that. Anyways, you have these 300 wallets. You split the 1 million across those 300 wallets. You have programs who, after you launch a token with your narrative or whatever, over the next 3 days, you deploy $1 million into this token, right? Some you buy up front, most actually you buy up front, but some capital you also buy later when the market cap is already at 2 million, 5 million or whatever. That particular capital injection may be at a loss. Like that last K chunk buy that you bought at 2.3 million and then at some point you sold, that particular buy may be at a loss. But overall, from beginning to end, you can think of like programs running and telling you exactly if you one click now, you get out 1.7. If you one click now, you get out 2.3. They will never be at a loss. Like they will not be at a loss. The only scenario where they would be at a loss is you inject capital and within the 3 days, and everyone else who bought after you starts selling into the chart because they understand that this actually is crime or whatever. In that scenario, if you one clip everything, you may get out with 600-700K. But in every other scenario where you build up this on-chain thing, and most people don't do it with 3 to 5 million. Most people, like most crime coins, do it to like 10, 20, 50 million. I don't know if you've seen Alt. Alt reached almost 100 million from CryptoBeast. Like one of the worst crimes I've seen. You get out at least like 2-3x more. And
that assumes you have an audience or you are a celebrity coin where other people are genuinely interested.
I mean, it amplifies it. If you don't have an audience and you only do it on chain, I guarantee you there will still be buyers because people want to participate in the crime and they take the risk of getting rugged. But yes, what I'm referring to is mainly also taking into account some sort of like social media audience that will buy into these things. Like Cristiano Ronaldo.
Okay,
I don't know if you've seen the guy.
On that note, I agree. Like if you have a distribution vehicle for that token, then definitely you can crime that into profitability. But if it's like if you have zero audience, I'd be very skeptical. I mean, we can try it out just for fun, but
no, you can do it with small amounts. Like you can do a pump fund token, just put in like $100, and then like do another $50 the next day, and then like do another $30 the next day, and then sell it all. You're not gonna get way less. You're gonna get almost your $150 or whatever you injected out. You're gonna get maybe 137, and maybe you get lucky and some people buy after you because they think this could be something, and then you get out 168. You actually made a few bucks profit. So it's really hard to lose money if you buy up the supply early. But why do I say this? Again, the only point is don't get impressed by high market caps. Those are not that hard to achieve.
Not a Fugazi.
Yeah. Otherwise, treasury companies are still like a mystery to me.
Yes.
It's like I see these billion-dollar private equity raises for companies to buy ETH.
I mean, just say I can't hear the name Tom Lee anymore. I can't hear it anymore. Like especially like I listen to this Bankless podcast, and I think they mentioned his name like 30 or 40 times, like 30 episode, and it's like, dude, come on, chill. It's like really they treat him like he's like Jesus or something, like as if the entire Ethereum community is so relieved to finally have a totem of belief because Vitalik is like, it's like not extreme enough. He's not a Michael Saylor. He's not an Anatoly. And just wanted to throw that in there because it's a little bit annoying.
You know, if it maybe like helps to heal your wounds, the Bankless people started out in Cosmos and then they pivoted to ETH. You know that, right?
I know. Yeah, I know that. Yeah.
That's just throwing salt into the wounds because that is implying that you should have pivoted too, like you could have been bankless. I mean, I don't know if you want to be bankless, but I mean, they for sure.
You want to be bankless, but you don't want to be bankless.
Yeah.
No, it's not like it is against bankless. I also listen to the episodes here and there. That's all cool. Like there's a lot of good content there, but it was more like, okay, come on, like I know this guy. Okay, Tom Lee is buying ETH, but can we talk about something different now? It felt like everyone is so relieved that somebody is finally buying ETH, and that all of these grown up, I really have to say it, all of these are grown up men talking about other grown-up men, like, oh, please, thank you, Mr. Lee, thank you for buying my bags.
But you know
That's
what?
like so.
Can you like my
so
pudgy
disgusting.
penguin profile
Yes,
pic?
can you like my pudgy penguin? It's like,
So-
you're all grown-up men.
Actually, Yuri, I don't know, like I feel like you had exposure to societies that were financially much less developed. And this behavior you're describing, I encountered pretty early when I was traveling south with my family. And I would see what people would do for money, but like not a lot of money. It was like for them it was significant, I assume. And I was so surprised by that, and I'm fully with you. Like seeing grown men, seeing what they like, how their behavior changes, or how they like behave in the first place, just because of someone else doing something with money, I never understood. I'm like, I couldn't care less, dude. Like, take everything from me. I'm not gonna use my stance and my like grit and my backbone and what I stand for. It's fascinating to me.
Man used to go to war, now they are prostituting themselves on crypto Twitter.
Yeah.
And buying plush penguins.
Yeah, and going to keine Musik concerts in Berlin.
I would probably die in war, but I would definitely go to war, I guess, back then. Anyways, speaking of war, have you seen Raya Jackson, the son of Rampage, like the incident at the wrestling event? Have you seen
I
that?
have who either of these three people are.
Okay. That was my UFC hat. Let's move on to a different topic. I think that's maybe not the best.
I'm not in trouble at all. Maybe on the note of stuff that is kind of gaining a little bit of attention again, one thing I find interesting is it's called Gaib.ai. It's kind of an GPU-backed stablecoin. I think using the term stablecoin here is kind of inappropriate, but essentially what it does, it's kind of using decentralized stablecoin and like all these stablecoin tranching, yield, airdrop, whatever mechanisms to bootstrap real world infrastructure businesses. In their case, it's just like GPU farming for like AI models, demand, whatever stuff. I'm not sure about the risk reward of this. If I compare to other stablecoin yields, I think there's better stuff out there right now. But I do find the idea quite interesting because if you look at these very capital intensive infrastructure plays, if it is in the energy sector, if it is data centers and computing power, if it is like bioreactors and all of these things, I think there's a lot of appetite in the middle class to upper middle class to invest in these things, not only via equities, but to get direct exposure to the underlying yields of these things. I think there's going to be a lot of blowups in that sector because the way it is modeled out is probably too predictable, too stable than what these yields are going to look like. But I just thought it was worth mentioning that this mechanism is quite interesting. It also could be a pivot away for some of these DePIN projects from directional tokens.
Oh,
to just,
DePIN still exists.
I mean,
DePIN still exists.
In terms of user basis, I think Helium is doing pretty well this year. Their token doesn't get any attention at all. And I think, I mean, the issue of these DePIN tokens that they give out a lot of supply just to incentivize the supply of whatever like physical infrastructure they want to provide and not finding any appropriate demand. That's an existing problem and that hasn't been solved yet. But I think the sector in itself and using blockchain as an underlying coordination mechanism, I still think directionally it makes sense. I do not have a lot of confidence that any of the existing DePIN projects will win bigly in the future. The concept and the idea behind it, I think it's still intuitive. Like I do not see that going away.
Yeah, I understand what you mean. I was just like surprised because like I haven't heard about DePIN in like almost a year. I haven't thought about it either. It was just gone. It was, yeah, it just vanished as abruptly as it came up in the early days of 2024. I think this was also like this 2024 thing where the Messari folks put out the report and forecast for 2024 and just said, okay, these are the big narratives for this year. And then a couple of weeks later, you went to East Denver just to find a side event for each of those narratives. I think it was AI, deepen, stablecoins, and decentralized social media, and DeSci. And I think just AI and stablecoins prevailed.
There's 3 projects out there which I think get mentioned here and there again. It's Helium. People still talk about like the user growth there, which I do think is going pretty well. I have not looked at the numbers myself recently, but I think in the first half of 2025 they've been doing all right. Then there's Hive Mapper, which is sort of a Google Maps competitor, and there's I think it's called GeoDNet or something, which is like a more accurate tracking mechanism than GPS, which you can use for like these drones and micro transportation and whatever. I mean, again, I do not think that blockchain is going to be a 0 to 1 innovation there, but in terms of fulfilling the idea of internet capital markets, it is a good vehicle to just make investing into these types of projects more accessible for the average user. So like, I don't think it will go away completely. Another thing that I've seen getting a little bit of interest again is prediction markets. I think, funnily enough, this was initiated by the whole NBA issues with people throwing items onto the playground and that being bet on Polymarket. Have you guys been using prediction markets at all?
I was just one thing when I saw it, I thought like it's like so genius. You know, you basically call like your most retarded friend and tell him, look, I give you like $250 or something ridiculous for you to throw dildo onto the field at a WNBA game, and I buy you the tickets. I mean, they're not as expensive as normal NBA tickets, and you bet on it on Polymarket. I mean, yeah. I mean, that's the thing. You can literally bet on everything on Polymarket, which also makes it kind of easy to manipulate it, because you always find someone who does something for money now.
I think the first time they popped up, I mean, yes, I'm very familiar with prediction markets. I've looked into the design of them back in the day, and I think the first time they gained very wide adoption was, like, I'm sure there's been many instances, but the last one I recall was the Trump election, and there's been this like French whale who made, I don't know, 4 or 5 million by betting on Trump, and some people made a lot by betting, by predicting even the popular vote to go to Trump and stuff like that, and all of that happened on Polygon's prediction market, which is Polymarket, obviously. After that, I think it lost a little bit of steam, but I've seen like smaller experiments pop up here and there. I've seen a couple smaller ones on Solana. I think none of them like caught enough traction to sustain. They all like disappeared.
I personally was very active leading up to the US election, so I took directional bets both on who was winning and a bunch of the swing states, and I was, I think except for one, I was right with every single one of them. I mean, the volume, it hasn't died down completely. I can pull up a Dune chart really quickly. So here we can see that the monthly volume, it peaked in October and November at a little above 2 billion. And it decreased significantly after that, but it's not completely dead. Like, it's not, it lost 80% or something. It lost around half if you're considering that. And the active traders is actually even more stable than the notional volume. Daily volume is also doing all right. Active traders also. So I think it is a healthy application, and it does make a lot of sense to host this on crypto rails. But yeah, for example, like for me, I do not like gambling in the sense of these outputs which are not either statistically driven or which I do not have any influence on. So like, for example, if you play poker, you have quite a bit of influence on it because it's statistical and it's a bit of game theory. So while of course there's a big portion of luck involved, you can build an edge over time. And I think if you play stuff like roulette or blackjack, I mean, yes, the house has an edge, but it is not like the house has an 80% edge. It has a very, very slight edge, and there is some statistical normalcy in these games. Whereas, for example, sports betting, like these things are very random to me. I have zero edge nor interest in any of that. Like, I do not follow sports myself. I find it very hard to take a high conviction bet on there. It's, to me, it appears as if people mostly just bet on the teams or players that they like. And like personally, that if that's the dominating application and stuff you can do on poly markets, it's not really that interesting for me. The geopolitical stuff is obviously much more exciting. I mean, you can reason more about it in terms of projected outcomes if you look at game theory or whatever. But of course, again, you have zero influence on the outcome. And for these edge cases, like the throws on the WNBA courts, I think this is such a, I mean, as laughable as it may be, I think it is such a great demonstration of what free markets can actually do. Like people insider trading on themselves, people engineering coincidences, people engineering outcomes. And I think that is getting closer and closer to the long evaded bullshit tax and like having something at stake again for voicing your opinions. And I think that's overall a positive development. And I do think that the sector of prediction markets, it will likely continue to grow. I don't think that poly market will die down. I mean, they have a lot of mainstream users. In terms of crypto consumer, if you look at active users, poly market is probably the number one app, which is like crypto native and also explicitly known for being a crypto brand. I mean, if you exclude Pudgy Penguins, which is somewhat a crypto brand, but it doesn't brand itself that way. I mean, what they're doing is selling plush animals. They're not like necessarily doing anything on the blockchain itself. I would argue that poly market is probably, in terms of crypto consumer, the most successful thing we have seen this cycle. So yeah, I think there's a bunch of new stuff coming up. There have been a bunch of Twitter threads circulating around that, but yeah, I think interesting.
Another kind of like reason why poly market is great is no one cares about the underlying chain. Like,
Yeah.
yes, you do have a touch point to being able to cover fees with, it's not Matic anymore, right? It's like Paul or whatever. But like, it doesn't really matter. It's just about the app. And I feel like the second we go one layer of abstraction higher, where you also don't have to deal with like fee paying and asset conversion for fee paying, you just have like the notion of a wallet, which more or less automatically handles everything and abstracts a lot of the complexity. I think that's when we're going to get more and more adoption. I feel like Coinbase Wallet is trying to do that in a way, and that's why I'm relatively bullish on that, even though it's not that crypto native, for example. But yeah, totally agree with you. I don't think poly markets is going anywhere.
Yeah, on the note of chain abstraction, one great launch we've seen, I think a week or two ago, is Jupiter which is collaborating with Fluid. And Fluid is kind of only active on the EVM, Jupiter only active on the SVM. And I think while, of course, this hasn't like, it's a market size of only 13 million by now and only 8 million in loans. So it's not a huge thing yet. But I think it's two very large protocols of ecosystems, each ecosystem's collaborating with another. And I think that's actually a very important step in the whole process of getting to prioritize good products over arbitrary chain loyalty and to just get closer to chain abstraction. Is there anything else that interests you guys right now? Like, what are you looking at? Where are you getting your news from? To me, it seems like a lot of people are frustrated about crypto Twitter. I've seen a bunch of people say that, kind of the alpha has completely disappeared. It's just slop. I would agree to it to some extent. I still think it's kind of the town hall of the industry. You still get a lot of like announcement. And I do think if you look at essays or articles, there is still good stuff out there, but if I compared to last cycle when I entered the industry, while I wasn't able to navigate crypto Twitter that well because like I was just new, I didn't know who to trust, who to follow, who's like actually an important voice in the space and who's just LARPing. I think the conciseness and the kind of actionable implications of content back then was much higher, especially if you go into the direction of market advice, trading advice, people formulating out theses for individual coins and projects. Now it's some like 3,000 word AI generated slop, which nobody wants to read through with like some bullshit metric projections of like based on completely arbitrary assumptions. So where are you guys like staying in the loop with the industry? What are you guys looking at?
To be honest, just by working in it. So it's like my operative day. I talk to a lot of people. I'm on calls, but I also took a little bit slow in the summit just because nothing much was going on. But I'm also heading to Dev Connect later this year. So like mainly through the personal relationships, but also besides that, a podcast here and there, including Bankless.
Very nice. Spilling the alpha to our co-hosts.
I mean, for me, it's you guys here. That's the source. And also on top of that, there's different layers. So working on actual projects with foundations or companies and engineers, I think that is by far the best edge that I have. And we actually build projects, and some of those hit the market, some don't, some materialize and becoming chains and L1s. So I think that's number one. Number two for me is Twitter, even before Telegram groups and Discord, because so Telegram I think is the worst for actual signal and alpha, because Telegram is more like, it's like lazy Telegram, right? You don't want to deal with Discord, but you just want to blast out certain information, and people either share tickers or they just like shitpost. That's what Telegram is used for. I think if you want to have real alpha of projects and you're not an engineer in the project, the Discord is as close as it gets if they don't have like a forum or something. But that I think is not scalable at all. Like you cannot be in 25 Discords catching up with all messages, which is why I actually think Twitter is the second best for me after working in the space itself. I personally don't have time for Discords. Like, you know, we have to make trade-offs. That's one of mine. I join, but I don't read Discord messages unless some specific mention or ping I have to. And it comes down to who you follow and what communities and circles you are in. But if you think about it, like, assuming it's not crime, because only if it's crime you need to be in at T0. But assuming it's not crime, buying a little bit late is fine. Like if you would have bought Fartcoin at 7-8 million, it still would have been perfectly fine. You don't have to catch it at 30K. So that's kind of like a trading example. But I think the trade-off of trying to be extremely early and the amount of work it requires only works in your early 20s. When you have the stamina and you don't have the responsibilities of like family or whatnot to do it. In your late 30s, like for me, like it's just not a scalable model.
No, I agree on that. Like if I see something which is time critical, unless I'm like in the sauna at the gym, I usually have like my phone or laptop always nearby. Like I can always jump in within a few minutes. Like there's nothing holding me up, preventing me from that. Like you just get flooded by all of these messages. And I think for just staying in the loop with what is happening, a combination of all of these media sources is the best. On crypto Twitter, you sometimes still stumble just randomly across something somebody else retweeted or whatever. And I think for some people, it's worthwhile having notifications on, especially for the directional stuff and people sharing like yield farming strategies. For Discord, I think it's still the best medium to get into actual discussions. because the channel model allows you to segregate by topics. And I think Telegram is terrible for that. Like there's some really good Telegram groups with very high quality people, like the Blockworks, the X Research Telegram, or the Telegram. I think it's the the Niger Delta Avengers from Jonah and Avi. Lots of good people in there, but it's just jumping from one topic to the next within 5 messages. And it is super annoying to sift through that if you only look into it once a day and then have to decipher that. It's just usually you just like click move to the latest message, and then you just try to stay in the loop after that, which mostly you don't. And yeah, I think that makes it a little difficult to stay in the loop well. I think what Telegram is great for is aggregating news or takes from crypto Twitter, because like a lot of these news curation channels or just research report collector channels, I think Telegram is the best for that. Like personally, I mean, the stage of like my life and this whole crypto journey I'm in right now, I think my edge, if I have one, mostly lies in just curating stuff well. And like I can just read through all of this thing and kind of filter out what is actually relevant, what is signal, what is noise. And for that, you have to be active on all of these platforms. But I agree, like if you are in one large Discord community, for Discord, the medium itself, like that's enough. It's just impossible to stay up to date with all of these things. And on the note of quality decreasing on crypto Twitter, yes, directionally I agree, because of a lot of the Kaido AI generated slop and people just shilling tickers not based on differentiated takes or even own capital invested in the ticker, but rather expecting an airdrop from the underlying project. That definitely has decreased quality a bit. Also, like a lot of crypto Twitter personalities have become a little bit entitled. It's like 50% of them are just like, oh, why am I not getting more views? Blah blah. Well, I mean, your content is boring. It's not delivering anything insightful. The conciseness and practicability of it and being able to apply it in the markets has vastly decreased. But still, I think that it is plus EV to lurk around on crypto Twitter, and I think maybe also to try building up your own brand. It's probably not as easy and as much of an asymmetrical thing to do as it was at the end of last cycle, but I still think if you look both at the way you get access to new airdrops, but also if you're like wanting to build up a career in crypto and like looking at job opportunities, like most of the people who get like the top 1% of like growth, BD, whatever marketing jobs, they all have a crypto Twitter personality. And most of them do not have like the crazy off-chain real world experience and certifications. They kind of posted themselves into their situations. I think it's still worthwhile engaging.
Guys, I need to leave now, but yeah, it was a blast as always. Thanks for having me once again. And then I guess I see you next week.
Until next week.
Sounds good, man. Take care. Ciao, Yuri.
Take care.
Have a good one. Do you have any other topics? Like, what does your port look like? Have you because you said like you're not really taking any new bets right now, mostly still allocated to the industry, or have you taken some profits?
No, I mean, in my case, like, just because of the jurisdiction I live in and because of like taxation complexity, I only hold like anything I have private were team allocations from the last 4 or 5 years, and I've been just holding them, or I've been selling them after minimum holding time of a year. But with regards to like more active management, it's mainly happening in like companies that I have like a share in. So, and those companies are mainly exposed to BTC, ETH, some majors, and very few meme coins.
Well,
it's like the extreme ends of the spectrum. It's like either BTC, ETH, and to be honest, like we caught the bottom of ETH when after Eric Trump called it and it dumped to 1.6, 1.7K. That's when we bought with size for us. And that's been up over, I don't know, 100, 200%, something like that. not 200, but like 100 something. Other than that, yeah, I mean, honestly, right now we're assessing exit strategies because, especially as a business, it's more important to protect downside than to optimize like for another X and upside.
No, I think like I can definitely agree on being rather heavyweight on majors. I'd say that right now I'm probably 2/3 to 75% allocated. I still have a little bit of stables left, which I mean, some of them I treat just directly as dry powder to yeet into the markets in case we see a liquidation cascade. But others I just use for stablecoin farming, and within stablecoin farming I also try to farm some airdrops. So like I also try to get directional exposure out of these stable coins in the future by farming these airdrop tokens. Not sure if I'm going to hold them, but I think that the ROI of farming some of these things is still pretty decent. Two of them, which I'm looking at right now, is Infinify and Stream Finance by XLaw and Drop. I've had both of them also on the podcast.
Yeah.
I'm definitely a biased backholder there, but I do think these two are worthwhile farming. On the other hand, of the part that is allocated, I would say I'm roughly 50% in the majors, BTC and ETH around equally weighted, a little bit of Sol, but Sol significantly less than BTC and ETH, because I used a bunch of my Sol stack to allocate into memes a few weeks and months ago, which honestly has not performed very well, but also like Sol hasn't performed very well either. So like, yeah, it's kind of hard to be high conviction on the Solana ecosystem, just in terms of assets, not necessarily projects being built. Other than that, I'd say roughly 20 to 30% in DeFi related coins, holding a lot of ENA, Syrup, Fluid, Pendle, like a bunch of these things. Again, like it's not necessarily a value investing bet, because you don't have a legal claim to the cash flows, and the fees generated by the protocol are not necessarily cash flows to the company or to the token. So like I completely agree that many of this is still like vaporware in the sense of being a suggestion token and not giving you a claim to anything concrete. And then around 10% in the meme coin space, I still have a few isolated bags in like AI agents. I hold the 1000x AI agent by Avi and Jonah, which gives you access to like a terminal thing where you can interact with LLMs trained specifically on the like their two personalities. So they're kind of trying to recreate a trading room or trading floor, which I think in general is a pretty cool thing, because we are lacking that in crypto. And yeah, I think like deep inside, I probably still have a wallet with a bit of Helium, bit of like Grass, because I found the airdrop there, and a bit of Hive Mapper, but these are like really, really small positions. And yeah, I think that's about it. I think in terms of Crypto X gaming, I hold a little bit of the Super token. That's the one by Elio Trades. I have zero clue about the sector, but I do think he's able to appeal to that audience quite well, and he's been able to BD quite well with crypto gaming companies. And I think if we see a resurgence in that sector, it is game theory optimal for most of these gaming companies to collaborate with the Superverse token, because that's the main distribution channel by a wide margin that you currently have for crypto gaming. Other than that, pretty much nobody's interested, so he can probably get pretty decent terms. And oh yeah, I forgot the Hype token. Hype probably makes up another 10%.
I also completely forgot about that. I think Hype is the token that lets me sleep the best at night, alongside with BTC and ETH. But anything other than BTC, ETH, Hype, I'm not sure. Even Sol, like the good thing about Sol is it's too big to fault, but it can easily go down 10-20% in a day. And it may go up again, but like I know, for example, I know a ton of Solana validators who have millions of Sol. Not talking about millions of dollars worth of Sol, talking millions of Sol. like 1 million Solana plus, which just times the price. So it's just hard for me to imagine the sell pressure of that. Maybe they don't sell. They're probably smart about it, how they want to liquidate that, if at all. But with hype, yes, there's like a couple vesting schedules from the team or whatnot I've seen, but I think that's really like the buybacks just eat that for breakfast.
Yeah. I mean, it's tricky.
I honestly think hype will do a clean 10x from here.
From here? So you think it will peak at between 400 and 500?
Yeah.
I think that's very ambitious.
I know. But it's like, for me, the most promising project of the cycle.
What could make hype get a little bit of a catch-up run-up would be the good performance of the centralized exchange tokens. Like BNB has recently broken its all-time high, not by a huge margin, but still, like, it's been holding up very well compared to others. And some of these other tokens, like the CRO, OKB, and I think MNT or whatever these others are called, like, since these centralized exchanges and their C-suite has a lot of supply control, they can really push the charts of these things up pretty aggressively, given that hype is sort of the decentralized antidote to what is out there in terms of centralized exchange tokens. I do think that there's a possibility for a catch-up. On the other hand, it's hard to imagine for the sentiment around Hyperliquid and the hype token to become even better. Because if there has been one everybody's darling this cycle, it is definitely hype. If you look at all the other ones, yeah.
One more point on hype that people don't talk about enough. Hype made early users rich. I personally know people from the trenches, not from my like work at the company, but like who made a 6-figure airdrop and they just used it early. And I think that is like the effect of that non-crypto people don't understand. Like the reason I work in this space, even though I hate it sometimes with all its like scams and celebrity coins and other bullshit, is basically the skin in the game effect and the multiplication effect of people changing their lives with this. It's nothing you can hire for. It's unmatched. Like imagine changing even just 100 people's lives. Let's say 10 disappear. Let's say the other 30 to 40 are just like around half-heartedly. I guarantee you the remaining 50, so roughly 50% of them, they will be the most die-hard champions, shilling you everywhere, promoting you everywhere, doing everything you want, being around even after 3-4 years when you bleed out. It's impossible to hire a marketing person for that or anything of that kind. Hype is the only project that's done that.
What we've seen in the 2017 ICOs for stuff like Link, Cardano, XRP, that stuff.
And Hype, in my opinion, is the only project that's done that. Every other airdrop was at best high 3 figures, maybe 4 if they were lucky. I've seen Hype people getting 6-figure airdrops, and I mean 6-figure airdrops in the sense of like it was a 5-figure airdrop, but Hype was at $4, and then a 10x.
Yeah, I mean I know a bunch of people also in the DeFi dojo where I'm pretty active. Like some of them were in the top 1 or 2% of airdrop recipients. Like it's literally changed their lives. Like it's insane. And I mean, yeah. Question to be is if there will be another Hyperliquid in the future.
No, I mean in the future, yes. This cycle, no. Like while I expect another meme coin runner, I don't expect another Hyperliquid like tech launch. Hyperliquid has been in the making for years. Hyperliquid is I'm one of the most fascinating things for me is like how pseudonymous or like not anonymous, but like how in the back rank the team is. It's probably the best team in the space. They're like Harvard grads and extremely they're 11 people, extremely skilled. executed like an oiled machine, like a Swiss clock. I mean, I don't even know what words to use for it. It's like literally as good as it gets. Only like being Tether or having like a stable coin may be better from a business model perspective.
No, I actually think that Hyperliquid even flipped Tether in per employee revenues or
per employee, yes, but not overall. But yeah, per employee, yes. Yeah. That was an interesting statistic.
Hyperliquid Tether.
Yeah, and I mean, I take Hyperliquid any day over OnlyFans. It's just like crypto may has its flaws, but we are trying to change financial rails and make a difference in the world. Anyways, let's not go into that discussion. But yeah, man, no, it's been, I mean, I'm with you. It's been like quiet. It's been calm. There's not a lot of excitement. I honestly like, it's going to sound pretentious and weird, but I want the cycle to end. I want it to be over.
Like, I really was not exhausted by the cycle until like a week or two ago, but now it's kind of, it feels like such a relief to finally see ETH running and now to get the hope back up that, oh, finally these stupid altcoins will finally get their run. I just want to get out of it. I want the cycle to be over. Focus on like stupid stablecoin farming, control airdrop farming, whatever. But
honestly,
20% plus minus.
I mean, for me, it's really not about the money. Like, even if I round trip everything, like let's say we get the parabola, I'm not selling, and then things come back to today's levels, which is roughly what will happen, right? Like, the coins after parabola usually go back to pre-parabola levels. Of course, in the long term, they go lower than that, but you have enough time to act. So in my mind, it's not even about like making an additional 20%. I really like, I can't trade as much because of the jurisdiction I live in, but generally like cycle to be over, focus on building, and maybe co-build the narrative of the next cycle. That's kind of like what would give me much more peace. Like get into my routine, work out 5-6 times a day, get a good sleep in, not FOMO like, oh, I missed the next meta, I slept over it. Which is a pretty bad feeling because let's be real, like, of course it's not sustainable, but if we have an edge in this money glitch of our generation, it would be irresponsible, if not ethically and morally completely wrong to not use it, right? And that's why, like, of course you have to compromise on sleep. If you can, because when again is an opportunity like this gonna come across, or when are you gonna come across again? In that sense, like I want it to be over, and then I want to just like build in peace.
In terms of the next narrative, like I don't know what the next on-chain narrative necessarily will be, but I'm reasonably confident that, I mean, in 2021 we have seen sort of Coinbase and like crypto equities starting to become a thing, and like centralized exchanges becoming mainstream, which then culminated in the collapse. Then leading up to 2024, 2025, it's been the crypto ETFs. Right now, it's the digital asset treasuries. I would say I'm reasonably confident that the next big trend will be securitization and like proper legal structures for bringing businesses on chain. Like there's, I think, 2 or 3 really exciting projects working on that right now. Among them, also Dimitri from Solitary. We've also had him on the pod. I think that was released a month or 2 ago. And I think like if this works, this can actually unlock new users, new capital flows, and like a lot of renewed and like white shirt interest, where it's not stained.
I mean, let me give you a sneak peek into what projects, especially European projects, faced. So, and maybe let me start with a story. So I was contributing to a European crypto project, I don't know, 8 years ago or something like that. And one day they got a grant, and that saved the business, right? Like the grant saved the business. They were super happy. They got the transaction. I think it was Tether, or what was the MakerDAO stablecoin called, which completely disappeared? DAI. Yeah, it was DAI, I think. And there was like a forum post, there was a crypto transaction on Ethereum, and they off-ramped the money. 2 days later, getting a call from the bank. Fast forward, bank closes the account. It's like, Where's the invoice? It's like, there's no invoice, there's a DAO post. Like, what the fuck is a DAO post? And the bank closes the account. The founders had to withdraw the money privately to their private banks. Today, 8 years after, they're suing the government basically for not having to pay taxes on that money because it's the company's money, not their own money. They kind of like, it looked like income. I mean, all this bullshit. How do I comfortably and with a straight face recommend to a European founder? This was 8 years ago, fair. Maybe today things changed a little bit, but I know it's only a little bit, not that much. Recommend to start a crypto business or startup in Europe. I would definitely not, right? It's suicide. You have to deal with bureaucracy more than with building your product or business. And as much as I'm a European accelerationist and I want Europe to succeed, I really do. I am European after all. The reality is just like, it's easier to be water or electricity and go the path of least resistance today. And what teams do today, and this is not a recommendation, but this is just like to outline the problem. They do like a trilogy of companies. They basically have an offshore foundation. I mean, if they want to go fancy, they do Liechtenstein or Switzerland. But usually it's like a Panama, Singapore's not offshore, but like Panama, BVI, Cayman, Keiko foundation as a legal wrapper. Then they have like another token issuer, which is like a temporary shell vehicle, which mostly is again a Panama IBC or it's like another BVI co. And then they have an opco, which is most likely a US LLC or something like that. Because the USA is fairly fine with receiving grant money from an offshore foundation. Once you have the US dollars in the US, it's fairly straightforward to set up like corporate service providers as for directorship and taxes and stuff like that and manage everything online. Once you have that, you can actually pay yourself in Europe or like wherever you are in the world by receiving a salary or having like a consulting contracting agreement with the US. So there's like 3, 4, 5 companies which you have to meme into existence and bullshit just because otherwise it's not possible. Like, you're not trying to scam anyone. You're not trying to dodge taxes. You're not trying to do anything shady. It just doesn't work. Like, there's no way. And that is just so sad. And that's why I'm looking forward to that. It might be a boring topic, but it will accelerate the space more than people think, in my opinion.
Yeah, I need a run, unfortunately. But I think on a last note, who would be interesting to talk to would be the guys from the I think it's All Unity is the company called, the ones who launched the Euro stablecoin recently. I think that's a German company even, and maybe Morpho because they are based in France. So maybe we get some insights on the building process in the EU confines from them. But yeah, was a great session. I got to run, unfortunately, but yeah, I think we covered quite a bit today.
Peace out.
See you next week.
Ciao, ciao.